Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 27th, 2025, and we're diving into the latest earnings report from UP Fintech, a leading online brokerage firm. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. UP Fintech has just released their unaudited financial results for the second quarter of 2025, and there's a lot to unpack, from record revenues to significant growth in net income.
Revenue and profitability overview. Let's start with the top line. UP Fintech reported a total revenue of $138.7 million for Q2 2025, marking a 58.7% increase year over year. John, what are the key drivers behind this impressive growth?
The revenue growth is primarily driven by increased user engagement and a diversified product offering. The company saw a significant rise in trading volume, which boosted their commission income by 90.1% compared to the same quarter last year. Additionally, interest income grew by 32.8% due to increased margin financing and securities lending activities.
And what about profitability?
UP Fintech's net income, attributable to ordinary shareholders, soared to $41.4 million, a substantial increase from $2.6 million in the same quarter last year. On a non-GAAP basis, net income reached $44.5 million, reflecting nearly 8 times growth year over year. This indicates strong operational efficiency and effective cost management.
Customer growth and asset inflows. Moving on to customer metrics, UP Fintech added 39,800 new customers with deposits in Q2. How does this align with their annual targets?
They are well on track to meet their annual target of 150,000 new customers with deposits. By the end of Q2, the total number of customers with deposits reached 1,192,700, a 21.4% increase year over year. This growth is supported by robust net asset inflows of $3 billion, primarily driven by retail investors.
And how has this impacted their total account balance?
The total account balance increased by 13.5% quarter over quarter and 36.3% year over year, reaching a new high of $52.1 billion. This is a testament to their effective customer acquisition strategies and the strong market backdrop.
Strategic initiatives and market expansion. UP Fintech has been expanding its market presence and product offerings. Can you tell us more about their strategic initiatives this quarter?
Absolutely. In Singapore, they launched CPF and SRS account trading features, allowing clients to invest using their retirement funds while enjoying tax benefits. This is part of their strategy to broaden their user base. Additionally, they underwrote 11 IPOs in Hong Kong and the US and expanded their ESOP business by adding 30 new clients, bringing the total to 663.
How are they performing in key markets like Hong Kong and Singapore?
They've seen significant growth in these regions, with average net asset inflows of new clients reaching around $30,000. This contributed to a 50% and 20% quarter-over-quarter growth in client assets in Hong Kong and Singapore, respectively.
Financial metrics and cost management. Let's discuss their cost management. How has UP Fintech managed its operating expenses this quarter?
UP Fintech's total operating costs and expenses were $71 million, a modest increase of 2.8% from the same quarter last year. Employee compensation and benefits rose to $35.8 million due to an increase in global headcount. Marketing expenses also increased to $9.9 million, reflecting higher spending to support their expansion efforts.
What about their general and administrative expenses?
Interestingly, their general and administrative expenses decreased significantly by 66.7% to $6.7 million, primarily due to a reduction in bad debt expenses. This indicates effective cost control measures in place.
Key takeaways. In summary, UP Fintech has delivered a strong performance in Q2 2025 with record revenues and significant growth in net income. Their strategic initiatives and market expansion efforts are clearly paying off. John, any final thoughts on their investment prospects?
UP Fintech is well positioned for continued growth, given their robust customer acquisition, diversified product offerings, and effective cost management. Investors should keep an eye on their expansion in key markets and new product launches.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on UP Fintech's performance in the comments below.